The Nifty is now down almost 140 points.
Currently, we're down about 0.5% on the benchmark indices.
The mid-cap index is the one that is shining in trade today. That one is up 116 points.
Just when you thought the market's putting some kind of a recovery, there's again selling pressure, and the sell-on rally texture of the market so pronounced. The 200-day moving average, which was the support for the market, is now acting as resistance. Classical risk-off trade where financials underperformed, healthcare, FMCG and IT outperformed.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in just 5 headlines. I'm Ekta Patra. Here are the top stories for this evening. The stock markets decline for the 6th straight day. The Nifty falls below 17,000. The Sensex hits the lowest level in 2 months. Bank stocks get battered. Indus Towers asks Vodafone Idea to pay its dues immediately, warns discontinuation of tower services. The Indus Towers board has also sought regular payment from Vodafone Idea henceforth. Global gold prices fall to a 2-year low, while prices in India are at 7-month lows. Dollar index at 20-year highs, and US Treasury yield weighs on sentiment. The Indian rupee sinks to a new low against the US dollar. One US dollar is now worth nearly 82 rupees. The Indian currency has depreciated 3% just this month. Godrej Properties gains on a land deal in Bengaluru. Gujarat Alkalis is boosted by new capacity. Motherson Sumi Wiring perks up on hopes of a bonus issue, while Supriya Life sulks after its CEO steps down. All right, those were all of the top stories that we're tracking this evening, but here's a lineup of what we have in store for you. It's a packed show as always. In Market Opinion, we have Sanjeev Prasad of Kotak Institutional Equities and Matt Orton of Carnelian Tower Advisors. In Big Corporate Voices, we have Sudhir Menon, the Chief Financial Officer at Torrent Pharmaceuticals. All right, let's get to the first story then of this evening. The stock markets are also under pressure, declining for the 6th straight session. The Sensex lost over 500 points to hit what is the lowest level that we've seen in 2 months. The Nifty fell below the 17,000 mark after losing over 100 points. Bank stocks too got battered in trade. Mid-caps managed to relatively outperform the blue chips, but the index still ended in the red. Let's go across to Anuj Singhal, who joins in with a detail on the markets trading session today.
Well, the market's been in some kind of a free fall. It didn't look like that up until 2 p.m., but the last hour has been particularly brutal for our markets for last few days. And today as well, there was a sharp move. In fact, from the highs now, the market has swiftly corrected big. In fact, the market leading index, the Bank Nifty, is now a good 10% of its recent all-time high. And the Indian market is now playing a fast catch-up with the global market after outperforming the global market in all the decline. A lot of heavyweights were under pressure, ITC, Reliance and HDFC, and the real big pressure came from the big banks, Axis, SBI and HDFC Bank. Metals as well under pressure, so names like Hindalco, JSW Steel and Tata Steel. This clearly is the global dollar trade which is playing out in the commodity market. And the level of risk off can be gauged by the stocks which were gaining today. And there were some, Asian Paints, Sun Pharma, Dr. Reddy's, even Hindustan Unilever. So basically pharma and FMCG are now your defensive bets in this environment. What next for the market? Well, technically the market's broken down. It's below its 200-day moving average and very close to 200-day exponential moving average. That also looks like at 16,800 under threat. But the bigger point for the market is what's happening with the dollar index and the USD INR. For the market to stabilize, you need stability in the currency market. Till that happens, the market will be vulnerable for the kind of day that we had today.
Okay, volatile for sure. Thanks, Anuj, for that. Let's get you some market opinion then. Sanjeev Prasad of Kotak Institutional Equities expects the Reserve Bank to raise interest rates at a faster pace than before. He also discussed his top bets in terms of sectors.
Our earlier view was that, we could get away with a shallow interest rate cycle this time around, and policy rates would have gone up to 5.75 to 6%. When I say policy rate, repo rate from a bottom of 4%, but now it looks like it could be somewhat higher for 2 factors. One is one which you already mentioned about being forced, to react to whatever the US Fed is doing in terms of raising rates much faster than whatever the market had thought about earlier.
All right. Well, let's get in some more opinion then. Matt Orton, Chief Market Strategist at Carilion Tower Advisors, said that both equity and fixed income markets are very challenging. He added that the liquidity problem in the market is a reflection of negative investor sentiment.
Even, we've had a near historic bad start to the year in the equity market, but fixed income has had an equally bad start to the year. And it's in regular yield is painful, and in real yields, 10-year real yields in the US are now north of 1.6%. That has been a big weight on equity markets, on valuation compression, and it's really hard to see a light at the end of the tunnel until we know when rates are going to peak. It was very, very challenging to hear that we're still going to have 75 basis points more in November, perhaps 75 more basis points in December, and then a cherry on top of 25 more in January. I'm not sure that's necessary.
Okay, well, let's get to the second headline that we're tracking this evening. We learned from sources that Indus Towers has asked Vodafone Idea to pay its dues or face discontinuation of tower services. These concerns were raised at the board meeting of Indus Towers, where the directors flagged concerns over the mounting dues from the telecom major. Both these stocks were lower in trade. Nimesh Shah is here with the details on this story.
That's correct. This is what I've heard from reliable sources, that on the 26th of September board meet, the independent directors of Indus Tower have taken a very strong view about the mounting dues from Vodafone Idea. Now, very strongly worded letter to Vodafone Idea, they've said that there could be service closures on the non-payment of dues. And they're seeking for immediate repayment of all the past dues, as well as regular payments henceforth. Now, according to numbers, close to 7,000 crores is the outstanding due of Vodafone Idea towards Indus Tower. In fact, for the last many months, Vodafone Idea has been able to pay only 40 to 50% of the regular dues, for which now the letter very clearly says that for this month, they want at least 80% of the money to be released, and from November onwards, entire 100% of the monthly dues should be paid. Not only that, it's a very strong letter that going forward, if they're not able to repay the money, there could be serious threat on the service closures as well on few sites. If you look at the Q1 number of Indus Tower and the management commentary as well, the Indus Tower had actually made a doubtful debt provision of 1230 crores in Q1. And they have been, even in the con call, they have said that one of the clients has been delaying the payments as well. So this is what, it's a very serious letter which has been put out to Vodafone Idea from Indus Tower. A couple of things to watch out going forward. One, the big question is, will the Vodafone Idea promoters infuse fresh capital into the company? That's been a key point which everybody's been watching out for. Even for the government's, spectrum dues to be converted into equity, there needs to be a full commitment or a strong commitment from the Vodafone Idea promoters. That's not coming through. So there are a lot of question marks on how and when the Vodafone Idea promoters will put in money. But coming November, the letter very clearly indicates that if there is further delay and the payments are not made, there could be serious threat in terms of service closures on non-payment of dues from Vodafone Idea.
Okay, all right, Nimesh, thanks very much for that. Well, let's move on to the third story for today. Gold prices hit a 2-year low, weighed down by global cues and what we have seen in terms of volatility of commodity prices. In fact, the commodities have seen a decline over the last 3 days. Manisha Gupta has been tracking this story on why gold prices are falling. She joins in with more.
Well, the gold prices are extending further decline. September is going to be the 6th straight month that we have seen fall in case of gold prices. The international gold is trading at 2.5-year lows. We have seen 11% of decline in this year until time. And the gold prices from the highs of 2052 have declined by 20%, currently trading below $16-20 per ounce there. For the Indian markets, the situation has been slightly better, as we have seen the rupee depreciate anywhere between 9 to 10%. So the Indian gold prices are trading at a 7-month lows. We've seen a decline of 2.5%, and the range for this year for gold prices until now has been between 55,000 rupees per 10 grams on the higher side to 47,000 rupees on the lower side. In the Indian markets, the gold is actually trading at a discount of $7 to $10 per ounce. The Indian markets also are looking at weak demand, whether it is about physical markets or if ETF as well, where September would be a 5th straight month of redemption when we look at ETF buying here. The markets do believe that the central bank buying also has continued to decline, is down by 14% on an year-on-year basis. So everywhere that you look, whether it's about prices or demand, gold hasn't really performed so well in this year until now. And that's exactly what the markets are expecting for the last quarter of this year as well. There are reports from ING and RBC suggesting that the gold prices will end this year anywhere around $1,650 to $1,660 per ounce, and the gold can be under pressure until we see the US dollar come off the kind of highs that it is trading right now at around 20-year highs, or the federal US Fed stops to hike rates aggressively as it has been doing for the last 3 times. Until one of those things happen, the gold prices could well be under pressure.
Okay, all right, Manisha, thanks very much for that. Time for a break now, but stay tuned. We'll be back in a jiffy with all of the other top stories this evening.